Hi, everyone. I'm Will Osborne. I'm an account executive with Madison Trust.
Same. I'm Ian Robertson, also an account executive with Madison Trust Company, and we are happy to dive into things today. Main focus is on startups and crowdfunding, but we're going to start out by really just touching on the self-directed IRA itself and the function of it.
Yeah, absolutely. So let's just start with the basics here. So a self-directed IRA is, at the end of the day, an individual retirement account, an IRA, legally speaking, exact same tax advantages, all the same rules. The only difference here is with a self-directed IRA, you can invest in alternatives, alternative investments. So we're talking anything other than the conventional products that most of you are used to. So conventional products, stocks, bonds, and mutual funds. With us, you can invest in nearly everything else, including startups, which we'll get to there. But Ian, anything to add
Yeah,
there?
this is not to be confused with the self-directed IRAs that, like Chase
There you
Bank
go.
or
Exactly.
Fidelity promote. They do offer self-directed IRAs in the sense that you can pick your own stocks, bonds, and mutual funds. But this is a truly self-directed IRA in that you can go beyond that, beyond the limitations of what's available to those types of brokerages and outside into alternative assets that just wouldn't otherwise be available to you.
Exactly. Yep. So we're a true self-directed IRA custodian, unlike some of those big guys out there.
Of
But yeah, thanks for adding that. It's very important.
course.
But yeah, there are a few things to consider here. As I mentioned, you can invest in alternatives, alternative investments. Only a few exceptions there. So you can't invest in life insurance, collectibles, or S corps. So with S corps, trusts can't be shareholders. IRAs are technically trusts. Yeah. And what do you typically see clients invest in?
I would say the most common investment in a self-directed IRA, at least with Madison Trust Company, is real estate in some facet, right? Physical purchasing, land flips. You've got real estate funds and syndications, multifamily, commercial opportunities, all of that. And then right below that is going to be these private placement investments, private equities, startups, crowdfunding opportunities, all of that. And so happy to dive into that a little bit more.
Yeah, I definitely see the same. So yeah, let's get started here. So I mean, a startup is really a company that's just getting started. It's in the first stages of its operation, and they're looking for capital to get things moving here. So typically startups, they're the founders at least, they're going to be going to friends and family for capital. They might try to get a business loan. They might reach out to venture capitalists for assistance. That's why a lot of these startups are based out of Silicon Valley because of the big community there. And there's pros and cons to those methods of funding. And another method, of course, is crowdfunding, which we'll get to. Actually, I think it's the very next page here. There you go. So crowdfunding, it's really just a investments from a number of individuals, typically smaller investments from a large number of individuals. Yeah, anything to add there for we
Yeah,
get
I mean, yeah, I guess the world of startups and crowdfunding opportunities come in all sorts of shapes and sizes. And so we're looking at things from, some guy has an idea and he wants people to support that. And then we've got pre-IPO, like they're ready to go full swing, become public, but prior to that, they need a big push
right.
from other investors. And so there's a whole range of different investments within that space, as well as different structurings for those investments. And
Yeah.
we'll touch
Yeah.
on that, I think, in a little bit.
Exactly. Yeah. I mean, we typically see what's called equity crowdfunding. So an individual gives, their hard money to a new company, and in return, they get a security in the form of equity. And that's opposed to donation crowdfunding, where it's just a donation. You don't get anything in return. That's not going to be
Like a
available to.
GoFundMe
Yeah,
for ones, yeah.
exactly. Or GoFundMe, something like that. So that's not going to be possible through an IRA. Neither is rewards crowdfunding. So you're just getting back rewards from the company. It could be their product. for example. So it needs to be equity crowdfunding, debt crowdfunding. That, those are two possibilities there. But there has to be an investment in order for the IRA to get involved. Just want to check out this section. Okay. So yeah, I mean there's a lot of reasons why companies turn to crowdfunding rather than the more conventional options. As I touched on earlier, it's a small investment or small investments rather from a number of individuals. So you don't have a venture capital firm coming in where the power is sort of concentrated with just a few shareholders. So with crowdfunding, that isn't a concern. So less dilution of power, maybe more dilution of power. Easy access to capital, as I mentioned, less pressure on management in that regard. And with crowdfunding, you're investing in startups. There's a very high upside. There's a lot of risk, but there is a potential for a very high return there. And so yeah, here are some of the benefits that I sort of touched on. Do you want to get started
Yeah,
here?
I'll dive deeper into that. And so before I even go into what's on the screen here, also worth noting is that crowdfunding investments are generally funded by supporters, right? And raving fans, if you will, of the product or company that's at play there. And so it's a twofold investment. You're investing because you see a potential for return, and hopefully incredible returns, more so than what you get once a company is already public, in a lot of situations. But beyond that, you're also investing in something that you're typically supportive of and are not necessarily promoting, but really providing the back end support of the company itself. And that's usually why people would even consider a crowdfunding opportunity. They're not typically going to invest in something they have no clue
Right.
about in this type of situation. But beyond that, you're also able to now diversify beyond what you've already got in your retirement accounts and your 401k, your IRAs. You're able to now take a portion of that or the whole amount, up to you, and start investing that into different asset classes than what you've already been exposed to thus far. And in these type of situations, they generally have lower investment requirements. So typically you're not looking at like needing 250,000 or
Right.
500,000 or $1 million to make these types of investments. There's usually a much lower barrier to entry. And so people that are even just getting started saving for retirement, they're able to even potentially start investing in these. Like it says there, you've got the potential for higher returns. That's, again, you believe in the investment opportunity, you believe that it's going to grow in value, or it has the potential to 10x or 100x what your investment is. And that's just something that's not as common just with a public security. It's already gotten to that point. Whoever invested pre-IPO, before it went public, they probably saw a larger fruits there. And then certainly this is within a tax advantaged account. So in the event that you're investing with pre-tax funds, this is all
Tax deferred.
tax deferred.
Yeah.
Yeah. So you're not paying a dime on the growth of the investment. You're only paying taxes when you start taking out in retirement. And in the event of tax-free accounts, or a Roth IRA, a self-directed Roth IRA, this whole investment is growing completely tax-free. And so if you invested $10,000 and it becomes $100,000, just as an example, that's $90,000 of just complete tax-free growth. When you do take that out in retirement, you don't have to pay any taxes at that point. And so these high return potentials make that all the more interesting, exciting, and the lower cost to entry, the lower investment amounts allow for really getting into it and investing a smaller amount with the potential for a higher return and tax advantage.
Yeah, exactly. And on that point, I do want to mention the Jobs Act of 2012, which really opened up crowdfunding transactions to non-accredited investors. So, a small investment is all you need to invest in an up and coming company. And these opportunities are available on certain platforms, and we're not affiliated with any platform, and we're a passive custodian. So I'm not going to give you any names, but I'm sure you can go online and find them very, very easily. Yeah, but you go on these platforms, you can look at basically the pitches from these startups, get some more information, check out the investment documents, and make your decision there. Speak with your financial advisor if you have any questions or if you need assistance making that decision. But that's how this is done. Typically, you're finding these opportunities on an online platform again, and this is all becoming more popular because of the Jobs Act. So I'm sure we'll be more familiar with these opportunities. You as a potential client, and us as the custodian.
Absolutely. And also to touch on that, the point that you're making there is that these are more accessible now because you don't have to, in a lot of instances, you don't have to be an accredited investor to be making these investments. And so you don't have to have a certain salary or certain income threshold or net worth to be able to make these investments as you once would have. And so it really opened the floodgates to let the everyday person start to get in on these better investment opportunities in some instances, and just have more diversification.
Yeah, exactly. Thanks for adding that. And yeah. So here are a few things to consider. So there are going to be some eligibility requirements. So to start, don't use your IRA to invest in your own business. That would be a prohibited transaction. Potentially, at least if your ownership in that company is 50% or more. But yeah, as I mentioned, that would be a prohibited transaction, and we have a webinar on prohibited transactions, so we won't get into all the details here. But I encourage you to check that out if you have any more questions. And of course, if you're disqualified, definitely don't receive a salary from this investment, because we want your IRA to benefit for your retirement. We don't want you to benefit now. And as I mentioned in the beginning, can't invest in S corporations. And that's simply because trusts can't be shareholders in S corps. An IRA is technically a trust. That's the only reason why. But it could be a C corp, LLC, really any other structure is okay. Um, and yeah, when it comes to due diligence, that's going to be on you guys. So we are a passive custodian. We're not qualified to give any advice really in any regard. We can, of course, help you out with some of the rules surrounding IRAs, but that's really it. So yeah, definitely consult with your financial advisor before making an investment decision, making sure it fits for you. And yeah, when you're ready to invest, we do need to go over the necessary paperwork. So Ian, I don't know if there's anything there that you want to add regarding paperwork.
Yeah, let me touch on the paperwork and then some more on the eligibility as well. So for the paperwork, like I said earlier on, these investments come in all sorts of shapes and sizes with different structurings, and so based on how the investment is structured really would determine what kind of paperwork that we need to see. We're not asking for any crazy, absurd documents. It's really, we want to see the documents that you as the investor would be seeing anyway, or should be asking for, like formation documents for the company, make sure it's actually properly established. It's in good standing with the state. It's not, defunct or anything like that. And then the agreement that you would be signing as the investor. We want to see that, whether that's a safe agreement, a convertible note agreement, a subscription agreement, a stock purchase agreement, whatever it is, we want to see that agreement. And then our team will work with you to make sure that it's filled out, showing the IRA's information as opposed to your personal info. And then also just to touch on the eligibility a bit more, when you're considering these types of investments, or even if you have a startup and you're looking to raise capital, or you even want to use your own funds to invest in your startup, there are paths that it can be done through, right? There's different avenues. And so it's not just right out of the gate a no. It's it depends. Let's ask some more questions to dig a little bit deeper. Same thing with the salary. You can be an employee of a startup, but there's more questions to be asked. Right. It still very well might be a no, but it's worth asking those questions. It's worth diving a little bit deeper into your specific situation. And in those types of scenarios, there may be a different structure that we need to go through to get you up and running. It may not actually be a self-directed IRA. It might be something else. And likewise, you may need an attorney to get involved to confirm and support you on your end to make sure that you're doing everything by the books. But it's not an immediate no, and it really just comes down to the specifics of what you're trying to accomplish.
Definitely. Yeah, very nuanced most of the time. So yeah, here's a quick guide on how to get started. So it's really for individuals who are looking to invest in these crowdfunding opportunities, it's a three-step process. Open the account, get it funded, and then we'll assist you in placing your investment. It's a quick online application. I tell potential clients maybe 10 or 15 minutes to sit down and complete it. When it comes to funding, if you have an existing IRA, we'll help you transfer it over. If you have a 401k, we'll give you instructions on how to roll over those funds. It's just a matter of contacting your plan administrator. And then the contribution, you just need our delivery instructions for a check or a wire. And when it comes to the investment, as we touched on, we need to review the investment documents. So there might be a private placement memorandum or an offering memorandum. Those are two very common sort of documents we see. And most of the time, there will be a subscription agreement that's going to list your IRA as the investor rather than you personally, and will assist you in making sure that the investor is listed correctly, basically Madison Trust for the benefit of your name. As I alluded to in the beginning of the presentation, it doesn't need to be equity crowdfunding necessarily. It could be debt crowdfunding, in which case we would need a promissory note, for example. If it's a convertible note, we'll need the applicable documents there as well. Could be a SAFE agreement. I could go on and on, but yeah, at the end of the day, we need to review the investment. We're making sure you're not transacting with yourself or certain individuals. Making sure that whatever you're investing in is federally legal. That's due to our South Dakota charter. Anything else I haven't touched on?
I think that was pretty good. I would say the only other thing to keep in mind, and this isn't typically the case even for these types of investments, but if you're a more active investor or you want a little bit more flexibility, there's also the way of making these investments through a checkbook control plan. We've got the IRA trust, we've got the IRA LLC, and those are just other avenues to give you a little bit more hands-on control in those situations. You don't have to go through our documentation review process. And so there's certainly benefits to going that route, even just sticking with the standard self-directed IRA. But it's worth noting if you're going to be a heavy transaction investor, it might be something worth looking into as well.
Yeah, if you don't want to wait for Madison to process a request, whether it's an investment request or something similar, then the checkbook IRA might be a good option for you, especially if you plan on being pretty active.
Right. Although to be fair, we've got probably the best processing times in the industry.
So. I'd say so too. I'd say so too.
That helps. But, yeah.
Yeah. So please feel free to reach out to either of us if you have any additional questions or want to discuss potentially opening an account with us. Happy to go over your desired investment or some ideas you may have. And some of you may have spoken to both Ian and I. So yeah, just feel free to reach out. Happy to help. We're on the East Coast, typically available 9 to 5. So yeah, anything you want to add?
No, yeah, I mean, we're here to help. If you are an existing client and you have questions, our support team's great. They can help you out as well. If you don't yet have an account and you want some more information, don't hesitate to reach out to us. No question is a silly one. We want to be here to provide you with some additional access, some additional resources to guide you on your journey. But yeah, I think that's about it.
Yep.
Happy to help.
Thanks, everyone.